Good morning from London. I'm Kriti Gupta alongside Guy Johnson and Lizzy Burden. We're about an hour away from the opening trade. Here's what you need to know. Sooner rather than later, German Chancellor Olaf Scholz is open to moving up a parliamentary confidence vote to before Christmas, potentially speeding up the country's election to February. Meanwhile, a thriving Trump trade, Bitcoin crossing the $81,000 mark, and assets associated with Donald Trump's win rally across the board as the president-elect speaks to world leaders and considers his cabinet picks. Meanwhile, Chinese stocks slide in Hong Kong after plans of large-scale stimulus failed to impress investors and paint an even gloomier growth picture.
Checking in on these markets, it is Veterans Day stateside, so US bonds are closed, but stocks are open, having crossed that psychologically significant 6,000 mark last week. We've got European futures pointing higher, the China disappointment weighing on the Hang Seng and on Brent, but Bitcoin having topped that $81,000 mark on the Trump trade, continuing to rally. The countdown to the opening trade starts right now.
Monday the 11th, as Lizzy says, it is Armistice Day. Welcome to the programme. It looks like politics and inflation are going to dominate the agenda this week. Let's start with the politics. The Trump trade obviously firmly front and centre in most people's viewpoint this week in terms of what's going to dominate. But I think German politics is going to be interesting as well. So let's start there. So the ARD interview last night, quite tense. Scholz goes on TV for 60 minutes. He doesn't come across as a particularly relaxed person. It looks like the election is going to be called early, but apparently there's an issue with paper. Apparently there isn't enough paper to be able to hold the votes in early January, and this now seems to be a sticking point, which feels a little wrong. Yeah,
there was real fury about this official raising the logistical and legal headaches about having an early election, but so much pressure, not just politically, but also from business to get this election done so that business gets policy certainty.
I think the timing of this is fascinating. It was right off the heels of the U.S. election. It's kind of this almost dose from a macroeconomic point of view that Germany, and by extension the rest of Europe, needs to get its act together. Time is of the essence.
So do we think there's a connection?
I definitely think there's a connection.
That was the point that was being made in the States, actually, last week, that this is a reaction to what is happening in the United States.
Yeah.
I think maybe causality is a little strong here, if you make that argument. I think one to the other. I think one was waiting to happen. Has it tipped it over the edge? I don't know. Europe clearly, to your point, though, needs to get its act together. And I think that is kind of the point that is being made here by many, that Germany just needs to get on with it. We don't have time to waste. Merz is calling Scholz a lame duck already.
I guess I had a fool. Some really sharp language, by the way. But I guess my question is how much of these kind of German economic issues are really tackled or really changed or really even addressed by a new person in power when so many of the issues are structural at its core?
Well, you've got Elon Musk, as I say, calling Scholz a fool, Merz saying that he would be open to deals with Donald Trump, so already talking about how he would handle the US differently. The international landscape really shaping up to be very different.
Yeah. Well, is this peak pessimism on Europe, though? I keep coming back to this argument. Is there anything else that Europe is going to have to deal with? Potentially tariffs? Have we priced those in? I think it's really interesting to kind of see whether or not Europe's at rock bottom right now.
Well, if you look at the markets, it feels like the answer is no. It feels like the doom and gloom that maybe surrounded the U.S. election doesn't exactly exist, especially when you look around some of the assets that were extra exposed to that Trump trade, because they are, of course, no suspicion here, or to no one's surprise, I should say, are rallying. Bitcoin, I think, is the poster child of that this morning, crossing the $81,000 mark. But it's not just Bitcoin. You're seeing other assets as well, emerging market currencies. The Mexican peso, for example, the Chinese yuan, both of them were expected to get hit pretty hard off of the idea of tariffs. They're not hit as hard as expected. Ukrainian bonds flying off the shelves, so to speak.
Altcoins, though, seem to be the story, like Dogecoin. Dogecoin is having a good time. These altcoins are having a good time. The expectation is that Gensler goes. He's been a real problem for this industry. Does that actually in reality happen? Are we going to see more ETFs being cleared for some of these other coins? That seems to be part of the narrative here. Is this a trade you want to fade? Again, is a question that I think people are asking. You're getting this very kind of sharp move. Is that sustainable?
Well, let me bring it back to the geopolitics. You've had Trump speaking to Putin, according to the Washington Post. You've had Putin congratulating Trump, Zelensky looking to get his meeting in with Trump as well, which brings you back to where you were talking about the Ukrainian market impact as well. And then when we come to the domestic picture, of course, we're keeping an eye on all of Trump's appointments too.
I think it's important as well to keep in mind to connect all of those dots here, especially when it comes to the crypto landscape, because so much of the crypto kind of mining, a lot of it happens in energy-efficient places. Like Texas, for example, is turning into a big kind of mining sphere. Russia has historically been the front runner of this because of that cheap energy picture. Kazakhstan, I'm not going to get too nerdy here, but can do that as well. And I think there is a connection here when it comes to how do you trade this and do you fade this at all, specifically because it comes at direct conflict with Trump's dollar narrative, the stronger dollar story that he's trying to kind of pump into the market, that there is no other alternative to the dollar. He's doing that with Russia, with China, with Iran, etc. But Bitcoin's thesis has also been anti-dollar. Yeah. So I'm curious to see how it all shakes out.
Well, interesting in terms of the European response as well, just that von der Leyen, the European Commission president, is saying that she would import more LNG from the US to cut the reliance on Russia. So even she's kind of, batting her eyelashes somewhat at Donald Trump there to reduce the European security issue. But the other issue that we've got to talk about this morning is China markets. We've had the CSI 300 and the Hang Seng sliding off the back of the disappointment there. The Hang Seng down 1.7% currently. UBS, interestingly, cutting its 2025 China growth outlook. There could be real volatility ahead. We just don't know how China's going to respond to Trump's trade war.
Well, this is the thing, we don't know. And it was interesting, I was talking to Tom about this, Tom McKenzie, as we worked our way through this process on Friday. He was like, why on earth would you at this point put all your cards on the table? Why wouldn't you wait until you know exactly what Donald Trump's going to do on tariffs? Why would you give that advantage away at this point? Wait, see what happens, wait until January, get a better handle. I think there was some talk over the weekend about Lighthizer coming back, which would suggest that maybe there is a stronger policy coming from the United States. Do you just wait for confirmation of that he actually wants the job, that he's going to take it on and deliver? Yeah. I don't know. It seems like China maybe is just kind of pausing for a moment in terms of what it's going to deliver.
Yeah, the FT reporting that Lighthizer was the pick. Reuters saying, no, he isn't. It's a really fascinating one as well, but I'm curious how much of that comes... I mean, the timing is horrible here. Tariffs aside, how much of the complacency is baked into this market when it comes to these Chinese stimulus measures? It's deja vu over and over and over again. And that feels like why the market is tanking today, in that you've heard this before and you're not seeing the results, and it's falling short of what investors need to feel more confident about the region.
We'll wait and see. I think, as ever with China, you need to take the longer-term picture. Everybody's got very excited about the short term. Let's find out. I suspect the next few months will provide some clarity. As I say, politics and inflation, both very much on the agenda this week. We're going to discuss both of those three topics, I guess you could probably call them, if you factor in the German politics and separate it out from the Trump politics. Ella Hoja, head of fixed income at Newton Investment Management, is going to be joining us. Eleanor Lee, fund manager at Polar Capital, joining us around the open. Miguel Stilwell de Andrade, CEO of the utilities company EDP, joining us exclusively. This is a stock that's been hammered post the Trump trade. It's been a stock that's been on a downward move, a sharp downward move for quite some time. We need to talk about what happens next. And Olaf Schick, the CFO of the German manufacturing giant Continental, Conti, is going to be joining us a little bit later. That takes us back to the politics. They downgraded their revenue guidance this morning, Lizzy.
Yeah, let's take you through as well what we have on the docket for the rest of the week. It's a busy one, but it is US Veterans Day stateside today, so the bond market taking a holiday. COP29 begins. Again, interesting in the context of Donald Trump's victory, a completely different backdrop for the sustainability, climate change story. Tomorrow we get the German ZEW figures and UK jobs data, which will be an interesting setup for the UK Mansion House speech. Later in the week, we'll hear from the Governor of the Bank of England, Andrew Bailey, and the UK Chancellor, Rachel Reeves. On Wednesday, big catalyst potentially for the market, US CPI. Does this change the calculus for the Fed if it comes in hot? Thursday, we get Powell speaking. Lots of Fed speak, actually, now that we're out of the blackout period. 12 speakers on the agenda, including the Fed chair himself. And that sets us up for US PPI and jobless claims later that day. US retail sales on Friday and UK GDP as well on Friday to come.
So Kashkari's already talked over the weekend, I think was it yesterday, talking about the idea that inflation isn't completely in the bag, that the Fed needs to still pay attention to what is happening there. CPI, PPI data coming out later this week. Last week was quite the ride for the US bond market. Does this week continue that trend? Today I know we're closed, but for the rest of the week there's an awful lot to deal with. Do you stay away from duration, as Rick Reed is suggesting of BlackRock? How does the bond market trade Trump? I think the story hasn't quite settled down yet.
Well, is the data still even relevant? I think is also a question, right?
Yep.
Like, do we even care about CPI or PCE or PPI if in 2 months' time we could get a completely different reading?
What happens if it ticks higher?
Right.
So if it ticks higher this time and we've still got the Trump trade to price in, is the expectation that actually inflation could be turning around here, that the economy could be reaccelerating here, and that kind of inflationary pressure is only going to get worse from here?
How much of that is baked into the price, though? 430. There's an argument to be said that 430 is relevant of that. Or 6. Dare I say 6? We'll have to ask some of our guests that as well. In the meantime, of course, we are keeping a very close eye on some of the other summits around the world.
So COP is taking place in Baku. We're going to go there very, very shortly. Is the US walking away, I think, is the key question that everybody's going to be asking themselves. So you're looking at live shots coming from that event right now. We'll continue to bring you those pictures. But as the US is walking away, how relevant is this event?
That's the top question. But another big question is, how much can Baku, Azerbaijan, really champion the move away from fossil fuels when they're so economically reliant on oil and gas exports? It's kind of ironic, but not an unusual theme.
We have had COP in the Gulf as well, so this is not a new theme. What else do you need to know this morning? Let's update you on some of the other stories that are important. Qatar says it is stepping back from efforts to mediate a ceasefire between Israel and Hamas in Gaza. The Gulf States Foreign Affairs Ministry says talks will resume when the two sides show, quote, willingness and seriousness to end the conflict. A source telling us that Qatar decided it can no longer constructively contribute to the process without a genuine interest in a resolution. Dutch leaders across the political spectrum have united in condemning anti-Semitic attacks against Israeli football fans in Amsterdam. Police arrested more than 60 people after violence erupted at a football game in Amsterdam. Videos circulating online appear to show Israeli fans chanting anti-Arab slogans. 5 fans were hospitalised and as many as 30 people were injured. This is an ongoing story. It still hasn't seen resolution yet, so keep an eye on what is happening there. And the Daily Mail says staff at one of Burberry's London stores have reportedly been told about a potential takeover by the Italian brand Moncler. The newspaper says the trenchcoat maker has paused discussions with affiliates until it has confirmed more details of the bid. Burberry has been trying to turn around its business after years of falling sales. Both companies declining to comment. Didn't see an RNS this morning. Looks like we're still in the early stages maybe of this, so there hasn't been a statement this morning that some might have anticipated.
No, but I had my suspicions when they appointed Joshua Schulman as CEO. Didn't I say this? He was ex-Michael Kors, ex-coach. Might not feel so passionately about Burberry being British, and lo and behold, the rumours begin about Moncler.
Well, the other side of this is important, too, the LVMH kind of potential bid, because you're essentially, as Andrea Felsted very, very aptly writes in her opinion column, trying to get ahead of any sort of carrying bid, right, at the end of the day?
Maybe. This feels like it's got LVMH behind it, doesn't it?
Yeah.
So LVMH takes a stake in Moncler. Moncler then looks to potentially buy Burberry. Everybody's been waiting for Burberry at some point to be consumed by one of the large groups. It's been surprising that it's lasted as long. Its pricing strategy maybe has only accelerated that by making it too difficult for its core group to buy its products, and therefore it's going back to basics. But this now feels like it's there's a certain inevitability about this, it feels. But it will be hard to resist.
It's so sad for London fashion. You know, all of the big shows have moved to Paris and other capitals around the world. This is just the last bastion of London fashion potentially falling.
Or maybe this is exactly what Burberry needs. Maybe it needs to be part of a bigger group. Maybe it needs that kind of heft. Maybe it needs that
investment,
creativity, investment, channels, optionality. Maybe it needs all of that. It needs to actually deliver.
We're, of course, going to keep everyone apprised of how those shares trade at the open. Those will certainly be something to keep an eye on. Coming up on the program, though, we're going to head to Baku, where we kick off our coverage of COP29 with a pretty strong lineup of guests, conversations you do not want to be missing. Plus, we keep an eye firmly on Berlin, with the country moving towards potentially earlier elections than anticipated. Consequences could be far-reaching across the continent. But up next, markets front and center as we look forward to inflation data this week. We'll see how fixed income traders are preparing or maybe not. If you have any questions of your own for our guests, please send them to us. IB plus BBTV Go is the function. Stick with us. This is Bloomberg. Donald Trump's upcoming return to the White House has significantly upended the outlook for U.S. interest rates. Bloomberg's Valerie Teitel watching it on the edge of her seat. Valerie, walk us through it.
Kriti, there are a few catalysts on the horizon this week. I want to take you through the big ones, one of which being the Fed speakers on deck, the big one being Jerome Powell, the Federal Reserve Chairman, speaking on Thursday. And this comes amid a Wall Street Journal report over the weekend saying he is readying his own legal fight, even willing to pay for it out of his pocket if it comes to that. We also hear from Christopher Waller and Fed John Williams, both influential members. They're all releasing texts of their speeches, and we'll have live Q&A. If we flip on the board, I want to talk about the U.S. data we also get this week, because it's interesting that Powell is speaking after we get CPI and PPI out from the U.S. this week. It rounds it out on Friday with retail sales, which is a good hint on where we're headed for fourth quarter GDP. The next thing that could possibly move the needle for the Treasury market is any notion of what Trump is going to pick for his Treasury Secretary. If we flip on the board, I want to talk about the person who is in the lead runner. That is Scott Bessent. He is the ex-CIO of Soros Fund Management, now the Key Square CEO and CIO, known as being a very Wall Street-friendly pick for Treasury Secretary guy. But I want to leave you with a few of his recent comments. He said a few weeks ago that any notion that Trump's policies is inflationary is, quote, absurd. He sees them as deflationary. He also floated a few regulatory changes, possibly changing regulation when it comes to U.S. banks having to hold more U.S. Treasuries. So potentially the next big buyer of U.S. Treasuries could be those U.S. banks themselves if that floated regulatory change does take effect.
Val, I hear what Bessent's saying, but look at what the market is saying. And the market is saying that Trump equals inflationary growth. Stocks go up. Bonds react quite strongly. You certainly saw that last week. Valerie, thank you very much indeed. Ella Hoja, head of fixed income and Newton Investment Management, joining us around the table to carry on the conversation. Is the market right? That seems to be the message that I'm getting from the market. Trump equals inflationary growth. Is that the right premise?
Yes, I think if you look at how bonds have behaved, break-evens in the case of pricing, slightly higher inflation from here.
Yep.
We obviously saw the headlines overnight with Bitcoin hitting $80,000. You've got a lot of vectors, credit spreads compressing and so on. They're all telling you that there is some inflation getting priced, at least from a market perspective. Now, of course, there's a bit of anchoring bias in that we remember 2022, but there were, of course, a lot of other factors playing at that time, including what happened in Ukraine. And so, you know, could this be the same? I think that's the question that the bond market is asking itself. But certainly the question mark is on the inflation bit rather than the growth bit.
If it is the same, 5% 10-year? 6% 10-year?
It's doable, 5%. I'll go with 5 first. Look, I mean, the big question mark is if you deliver on the setup of the growth agenda that's on the table, then certainly bond yields have to price higher. But of course, as we know, things don't happen in isolation, right? There is the real economy. Will animal spirits be sufficient to push growth upwards? Because if nominal growth is heading significantly higher, then bond yields would be heading higher as well. But I don't know that this is sort of like the big moment where bonds reprice to 6%. I think that might be a bit later next year, but certainly not for the first half.
So 5, like 6 maybe. We'll stick with 5.
What's the floor in that situation?
In terms of the downside,
yeah.
Well, I guess 5% probably drags a lot of attention, including from ourselves, so we would be interested, mostly also because there's some uncertainty on the jobs front, and we don't know how much of this agenda will actually come forward. And then the second element, we talk about the U.S., but of course there's the global growth element, right? So China is still sort of trying to put a floor on its own growth, and as we know, tariffs tend to be less good for the sort of the exporting economies such as China and Europe. So it might be good for growth in the U.S., but it's certainly not good for global growth. So you have to take those into account. And treasuries don't just price the U.S., right? They also price what's happening to global growth.
Well, speaking of that story, we were talking just in our last segment about whether or not the CPI, the PPI data kind of points are as crucial to the way you trade bonds if you do have this element that in 2 short months, any good thing could change on that tariff narrative. How closely do you pay attention to these data points?
Well, it's tricky. I think some of the market indicators will tell you more in terms of the inflationary side. And as we discussed with Guy, those are very much engaged. Going forward, I think we'll need a little bit more time. It's very early to start seeing this price into the CPI momentum. I think CPI is still well behaved and relatively benign. Going forward, it's a very different setup.
How much of that then is more maybe perhaps traded instead of through kind of the base bond, more through break-evens, the hedging, the expectations of it? Is that where maybe we see more of that bond volatility?
Correct, and that's one of the reasons that we've been holding on to some inflation protection across the board, really. And it's exactly because of this risk. What if this is probably as good as it gets on inflation, right? There is a risk of that. And that probably plays to the 1970s playbook that we've talked about here in July, actually. So there is a risk of that, and you do want to have some inflation protection in your portfolio in bonds.
So what we haven't mentioned is the central bank story. How much are you expecting a December Fed cut? And when you think about Europe, given the fiscal constraints, how much are you expecting the European response to Trump's tariffs actually to be monetary?
Well, the market's saying to the Fed, don't cut further, right? So this higher for longer setup could play here. And this is happening at the same time as we see some of the leading indicators in the jobs front actually painting some risks down the road, right? So whilst you get this sort of growth and inflationary agenda come through, it will take time. But the jobs market under the surface has been weakening. We know that. That's what drove the rally in bonds over the summer. So there is a little bit of a risk around that. But the Fed has a very difficult path to tread here. We know that the electorate voted against inflation. And so perhaps the Fed will be a little bit more cognizant of the risks on inflation. But that means you probably risk growth on the other side. So I think macro tail risks are very much wide open here, I would say. And it's probably going to be a very trading market in 2025. A little bit similar to what we saw this year, but perhaps with bigger swings, I would say, on the ranges and breaks.
Are you expecting a different response from China this time to tariffs? And how are you thinking about China? We've had this disappointment over the stimulus this morning, but will it be different with Trump's second term?
Well, I mean, the Chinese policy approach has been quite different, so we should expect it to be so. So we've had enough, well, not enough perhaps, but we've had sufficient fiscal stimulus come through. It's not the kind that's boosting consumption, which is probably what the markets wants to see. But the message is clear that they want to put a floor on growth, and perhaps they need to see what happens with tariffs in order to respond. So I'd be cautious not to be overly bearish Chinese assets here, but we will get lots of volatility, perhaps some downside. But I think on a 12-month basis, there is more appetite, domestically at least in China, to support the cycle.
Lizzy, just back to your point about Europe, though. I think it's really interesting that, in some ways, Europe doesn't have the toolbox, apart from Germany, to respond fiscally. So, therefore, the monetary response is maybe the way to go. And that would seem to imply quite a big spread, therefore, between the Fed, to Ella's point, and maybe where the ECB is.
No, exactly. One of our previous guests was saying that Christine Lagarde needs to get in there with a jumbo cut if Trump were to win, and he has. So that's kind of what I'm wondering, whether she will and if anyone thinks she will.
Well, the ECB is engaged. We heard from them immediately after the election results in terms of the risks that this represents for growth. This could also be a bit of an opportunity for the Draghi plan to come on the table at their summit. This came up.
So.
Absolutely, and Europe usually tends to use these periods of crisis to get some momentum, so I wouldn't write that off. It's early days, but it could be perhaps a setup for something to come on the fiscal side in Europe, something that's a bit more growth-focused, but it's too early now. For now, the markets will play this rate differentials, which probably works more in favor of the dollar and against the euro, and perhaps sort of rate spreads widening between the two regions.
Ella Hojo, great to have you with us around the table. Head of Fixed Income Newton Investment Management. Always good to have you on the programme. We're going to continue talking about Europe next. German Chancellor Olaf Scholz opening the door to a vote before Christmas. This is Bloomberg.
Thirty minutes away from the start of the opening trade. Quick check on futures here. We are seeing green on the screen when it comes to the trade here. Your Stoxx 50 futures higher by about 0.6%. CAC futures higher by about 0.5%. S&P futures lagging, but still very much in the green. Let's take a quick look at the bond story as well. Guy, you are seeing a bid into the bond market across the board. The idea here that the German 10-year is seeing about a 4-bip move. Yep. It looks like bids, but then same story in France, Italy, Spain, etc.
Yeah, last week we saw more volatility, and I'm wondering whether you see more volatility this week. Today could be a bit of a non-event in as much as the Treasury market's closed, so you won't get that signal a little bit later. I know you're going to get the futures trade, but maybe you don't get that signal. It feels like it's going to pick up towards the back end of the week, though. Like if you get a hot print on inflation, life could get quite interesting, certainly for the bond market. Let's talk about what is happening in Baku right now. So you've got COP29 taking place. Right now, and you're looking at live pictures, you're basically in the process of the handover from COP28 to COP29. But the whole event is being overshadowed, of course, by the election of Donald Trump. Does the US walk away from this process? What happens with the Paris 2015 agreement? There's an awful lot going on. You do wonder whether or not actually it's going to be hard to make progress at this event. Joanna Basecci, our Middle East anchor, is in Baku for us. What's on the agenda? What should be on the agenda? What was this event designed to do?
Yeah, let's talk about maybe what they have designed it to be about, because this COP29 isn't supposed to be as big as the one that took place in Dubai last year, COP28, or the upcoming COP30 in Brazil next year. This one is specifically focused on climate finance, and at stake here is a number that was put together at the 2015 COP, the Copenhagen COP, where they set out a target of $100 billion of financing to be provided from rich countries to developing countries to assist them with climate mitigation, adaptation, and also the transition. So that was a target that they had set, but it's also worth mentioning that that target, that 100 billion number, has only ever been reached once, and that was 2 years ago. So this COP is an opportunity to revise that target upwards. The IEA are estimating that actually the needs now are so much greater than they were in the past, to the tune of about $1 trillion annually. Now, where is that funding going to come from is a big question. It's coming at a time where budgets around the world, as we know, are coming under pressure. The aid pool is getting smaller. You have lots of directions that countries are being pulled in, not least to mention geopolitical conflicts. And then you have potentially the bigger involvement of multilateral institutions like the World Bank and possibly private sector as well. So that is what is at stake for COP29. But of course, the backdrop to all of this is the geopolitics that I just mentioned. Many conflicts raging around the world, which sort of takes the attention away from some of these climate issues. Plus, the big one is the return of President Trump to the White House. And as we know, one of the first moves that he did when he became president in 2017 was to withdraw the U.S. from the UN Paris Agreement. So if there is a repeat of that, it could definitely cast a huge shadow over many of the discussions that are taking place here.
And Joanna, from the people that you've been talking to on the ground in Baku, how are they thinking about the return of Donald Trump to the White House, how it's going to influence climate change in the future?
It's going to have huge consequences. All eyes will certainly be on the current U.S. climate envoy John Podesta's speech that's happening at 5:30 p.m. local time. But many people are saying behind the scenes that this U.S. negotiating team, this delegation, has become a bit of a lame duck team, because all of that could be upended come January once Trump steps into office. And at stake here is, again, as I spoke about, he could once again withdraw the U.S. from the Paris Agreement. He could also actually withdraw the U.S. from the entire UN framework, which, by the way, once it's done, is very difficult to get back into again, because you need the approval of 2/3 of the Senate to get back into the UN framework. And if he follows through on his promises, like reducing tax cuts and subsidies for clean energy, for renewables, even pushing forwards with fossil fuel production, all of that could lead to an increase of emissions, which 100% contradicts what all of these climate talks are about. So yes, a lot is at stake. And we haven't even mentioned the financing. The U.S. is, of course, the world's largest economy. They have provided a lot of money, support, background discussions to get these financing agreements in place. And given that the focus of this COP29 is going to be how you secure more financing, again, that gets thrown into jeopardy. And then the final piece to think of is, if the U.S. step away from the mantle of sort of leading the charge on these climate discussions, who steps into their place? Does it open an opportunity up for China to then become the leader of these climate talks? And what does that mean for some of the geopolitical discussions that are taking place around the world with that vein as well? So yes, there is a lot at stake here. And then we haven't even spoke about the fact that the European Energy Agency is warning that 2024 is actually going to be the warmest year ever. And so this is a time more than ever that these countries need to come together and focus on reducing emissions and collaborating, as opposed to having the world's largest economy potentially withdraw from some of these important frameworks.
Bloomberg's Jumana Bersetchi walking us through the latest out of COP29 in Baku. We thank you so much. You can stick with us throughout the week at that summit. We'll be bringing you interviews with key figures from the world of trade, including the WTO Director General, the World Bank President, and the Greek Prime Minister, among many, many others. The question, of course, Jumana put, if the United States is not at the helm of those talks, who will be? Is it China? Is it Europe? Is it others? We'll have that conversation for you live here on Bloomberg TV. In the meantime, back to a focus of right here, what's happening in Europe. Political turmoil continuing in Germany after the collapse of the ruling coalition. Let's get more from Bloomberg's Oliver Crook, of course, standing by. Ollie, walk us through how things are looking this Monday morning.
Yeah, Kriti, right now everybody's very concerned with the sort of procedural, sort of the mechanics of how this election finally gets called. As we know, what Olaf Scholz needs to do is bring a no-confidence vote against himself to the parliament, and he initially wanted to do that in January. He's getting a lot of pushback right now to do it a lot earlier, obviously from the opposition, Friedrich Merz, the leader of the CDU, Merkel's historical party, the one that's doing the best in the polls right now, but also within his own coalition. And as it turns out from the polls of the German population, they all want to see it happen a lot faster. The main problem you have is not so much the mechanics of the vote is on your screen right now. If you look at the polling across Germany, even the two top parties, the CDU and the AfD, who, by the way, would never work together because the CDU has ruled out working with the AfD, as has every other mainstream party in Germany, that still doesn't get you over 50% of the votes necessarily. So the real question for Germany, having just left a sort of very fractious coalition and really sort of a time of over a year of sort of political, confusion and disagreement, there is not really a very clear path to, once this election is held, what that government will look like.
Ollie, there seems to be concern about a lack of paper. Should I worry about a lack of paper? Are there enough ballot papers to be able to make this thing happening and make this thing happen?
Yeah. So listen, we've heard from the sort of paper lobby of Germany, the sort of institution that talks about that is in charge of having all of the paper ballots ready in time, and they say that there is no shortage of paper. There should be enough ballots, right? So this is the sort of allusion to the fact that Scholz is saying that we shouldn't do this too quickly, and government officials are basically saying that we may not be prepared to have the vote too fast, but we've been reassured that the ballots will be there, Guy.
Ollie, great stuff. Thank you very much indeed. Important to hear from the German paper lobby on this issue. Let's talk about what we're going to be seeing as we go through into this market open. Two things to say. First of all, I think it's interesting that European stocks are called higher this morning, despite the fact, actually, that the Asian trade was a little bit more muted. So you're not seeing the read across out of China into Europe this morning. Continental looks like it's called higher this morning. We're going to be talking to the CFO a little bit later on. It's interesting, actually, because they downgraded their top-line growth numbers. Maybe that was a little bit in the price. They're talking about spinning out their auto industry. Again, you just come back to how much more can be priced into this stock. It's had a really bad run recently, come off quite significantly. Is all the bad news in, Kriti?
It is, and it feels like it's a fascinating conversation here as well, in that this is, because it's been so beaten, you bring up the idea of if it's the valuation play at the end of the day when it comes to renewables. So many of these kind of Trump trades or renewable trades that have really been under pressure in the last, I won't say year, I'll even go back 2 years. Maybe this is the time to buy because the valuations are so cheap. I'm curious how tempting it is.
Yeah, we're also going to be keeping an eye on Moncler, on Burberry, I should say, potentially up at the open if, as you say, this Moncler deal could be good for Burberry. Moncler, of course, reported to be poised to make a move for the fashion house. We'll bring you more on that and your other stocks to watch at the open, so do stay with us. This is Bloomberg.
Our differences on contributors and quantum and set the new goal. These negotiations are complex and difficult. We understand the political and financial constraints. But let me make 2 points. First, these numbers may sound big, but they are nothing compared to cost of inaction. This investment pay off. And second, we are all in this together. Nothing has a greater impact on the security, prosperity, and well-being of all nations and climate change. Let us remember how a goal helps us. It will send a strong signal to financial markets, provide greater certainty for long-term planning, build trust and momentum for collective action, and hold us all to account. This goal is not a burden, it is an opportunity.
COP29 taking place in Baku, Azerbaijan. The COP29 president speaking there saying we're all in this together. But is the United States about to walk away from the climate fight? I think that's one of the key questions that is overhanging that event. We'll keep you updated on how what progress, if any, is being made at that event. Let's talk about the markets. Have you recovered from last week? If you were in the bond market, it was a brutal week. But are we done yet? Rachel Evans, Bloomberg's managing editor for FX and rates coverage for the US and EMEA, joining us this morning around the table. Last week was brutal. This week, maybe a little less so, or maybe we're starting on a slightly easier path that is Veterans Day in the United States, but still feels like there's some momentum behind some of these trades. Bitcoin's certainly sending that signal.
Yeah, absolutely. I mean, sort of blowing past 81,000 today. I think we're kind of seeing people trading off thoughts and promises from the campaign trail at the moment. So there's going to be a question of how much of this kind of becomes reality and how much more can we actually see before Trump really takes office and is in a position to sort of start outlining kind of the kind of policy and law implications behind some of the talk that we've seen. So, I mean, last week we saw on the Treasury side, as you mentioned, we saw huge volatility. We saw kind of people paring back the Trump trade, putting it back on, paring it back again. I think we're going to see a lot of that kind of volatility, and volatility kind of become the name of the game as everybody is still trying to trade off the signals that are coming out rather than the actual policy and actions that really come to pass.
A lot of the conversation is that yields are ultimately going to hit 5%. That's almost building into a consensus story. But how much of that is a function of the U.S. as opposed to a function of China?
Yeah, it's a good question. I think we're seeing a lot of kind of chat around China at the moment, just given we've had kind of these meetings and the sort of fiscal stimulus that people were hoping for hasn't really come to pass. We've obviously seen the $6 trillion debt swap, which sort of helps put a bit of a floor under sort of some of Chinese assets, but we have still seen kind of Chinese stocks selling off, the yuan under pressure. And I was really interested in a story on the terminal this morning about kind of the trade surplus in China heading back towards $1 trillion. And that's really interesting when we do look at China versus the US, because obviously Trump has kind of made a big point in the run-up to the election talking about tariffs and talking about sort of trying to counteract other powers around the world, particularly China, where he's been very harsh from a rhetoric perspective on them. So the fact that you have kind of, these domestic slowing factors in China that they're trying to counter, this issue of the trade imbalance with the US and kind of Trump coming back in and talking again about tariffs as he did in his first term, that really does kind of set up a very interesting picture for sort of risk havens like treasuries. And I think that's going to be a really interesting sort of cross-current, particularly as we think about sort of Trump's domestic policies and how they impact yield, the monetary policy on the Federal Reserve side, but also that kind of haven aspect that treasuries typically play.
We've also been debating the response from Europe to potential Trump tariffs and whether it will have to be monetary because of the fiscal limitations. Do you think, given all of this kind of quite hawkish rhetoric out of the Bank of England last week, that you'll end up seeing the pound strong against the euro because of that gap in monetary policy? Yeah,
I mean, that certainly seems to be what people are talking about at the moment, that the UK, for whatever reason, looks like an island of stability versus kind of elsewhere. You do have much less impact likely on the UK, given it's a services-led economy. So that is really benefiting the pound at the moment.
All right. Rachel Evans, Bloomberg's managing editor for FX and rates coverage for both sides of the Atlantic, joining us this morning to walk us through some of the trades at play. Let's go from the macro to the micro. Get our stocks to watch with Joe Easton. Joe.
Morning, Kriti. So we're watching Burberry today after a report in the UK press saying that Moncler is edging towards a takeover of the British fashion house. Now, according to the Daily Mail report, the company over in Italy has actually informed some of Burberry's staffs that there could be a takeover impending. As we can see from the stock, here on a 2-year view, it's down around 60%, and this is why this company really has become speculated as a potential takeover target for Burberry. But we need to put it in the context of last week, because remember, on Friday we did see a big drop in a lot of the luxury stocks, and that was partly due to the disappointment around China's fiscal plan, which weighed on sectors like luxury, also miners as well. And we did have that report from Richemont at the top here that weighed on the shares. So Burberry was down almost 8%. Potentially we're going to see a bit of upside following that news report on that stock there. Then over in autos, we've got Continental out today. Now actually downgrading a lot of its sales forecast once again, seeing weakness mostly actually in North America and Europe. There isn't much on the Asia part of the business at the moment, but it's another stock that has declined quite a lot from where we were around a year ago. Traded around 78 euros. It's now trading at 56 at 50, so potentially priced in, and we are actually seeing the stock moving higher on the Tradegate exchange in Germany today, just showing how the negativity around this sector really priced in. In terms of the analyst ratings, there are a few sells. We've got 3 sells, 12 buys, so most of the street is positive on that one. Then Novo Nordisk has a big call over at JP Morgan today. JP Morgan putting the Danish company on positive catalyst watch. This is ahead of some new drug data for obesity. So they've got a rival drug coming out, which is going to rival Wegovy and also the Eli Lilly products. We will get data on that next month. And JP Morgan says it's a time to buy the shares ahead of that release, because it should confirm that this drug is the best in class in terms of obesity drugs, and they reckon the results of that trial will spur a 10% jump in the stock. According to their analysis, it should show better tolerability than some of the other obesity drugs. We can see Novo has actually come off its highs over the past couple of months. Concerns around competition weighing on the stock, and also just a bit of easing in the obesity drug momentum, so potentially this is a decent call from JP Morgan this morning on that one. Then finally, in your other analyst ratings, Richemont gets a buy. That's after that big drop that we mentioned on Friday for the company. BASF in chemicals, they see an inflection over at Goldman Sachs. There's a buy on that one. And also Ryanair, UBS reckons the fare declines are starting to ease, and that one is a buy. Could be a mover over in Ireland this morning.
All right, Joe Easton, our equities reporter, bringing us some of the early analyst calls, some of the early moves you're seeing on that Tradegate price. I'm going to start where he really began, which is that Continental story. We're going to be speaking to the CEO in the next hour. CFO, excuse me, in the next hour. I think this is a fascinating story. Of course, we know this is the major auto parts manufacturer. They've already been on a decline. They're downgrading their sales forecast more. They're probably going to feel the pressure from the geopolitical situation in Germany as well. Does that mean that the stock continues to drop, or is there a moment where people want to dive in?
I think we also need to get some clarity on what happens with the auto parts spin-off. Remember, this is a 3-part business. They're talking about spinning out the auto side. Is that on track? Does the timeline get affected by what happens in Germany, by what happens with Donald Trump a little bit later? European equities are called higher this morning, which I think is interesting, given the fact that actually the story out of Asia has been more negative. And you've got maybe some commodity weight coming through. There are some key stocks. Like Conti's going to be one of them. Burberry could be certainly another one of those that we're going to be watching. But I think it's interesting that Europe is taking a different view to maybe the one we've seen out in Asia. Yeah,
potentially the reason why FTSE 100 futures a bit lower than Eurostoxx 50 futures could be that weight on the miners. Iron ore lower this morning because of the China story.
I think it's also important to keep in mind that there was a major overhang in the equity market broadly, and you saw it really in every equity market outside of the United States. And now that we're talking about this bond market maybe not being as attractive as it was, actually there is I feel like, trade-off almost between the bond market and the equity market, and maybe that's helping create that bid.
Maybe as well, a factor that we should think about is the euro. So down, we're now trading at 106.88. So we are, this kind of decline that people are seeing as consensus trade now towards parity we're miles away from that at the moment. But is that the direction of travel? So you've got a bit more weakness creeping into the market. You obviously saw a big trade Friday come through, significant weakness being priced back into the single currency. How much further has that got to go? And could that be a catalyst? How big a catalyst could that be for European markets in terms of the dollar earners? And just in terms of that export potential that maybe would come with it as well. I think that's going to be an interesting trade to keep an eye on too. But this morning, I don't know, it feels a little quieter than maybe the back end of last week. But there's a lot of things to price in as we work our way through this week. Inflation particularly, the back end of the week.
Do we think the political story in Germany is going to be weighing on the DAX, perhaps? I wonder if that shows up.
It's going to be interesting to hear from the Conti CFO. Does he want an early election? Is it just now time to get on with it?
Yeah.
That seems to be where the momentum is building, despite the fact there may be a lack of paper. But Scholz was nervous. He felt tense yesterday in this interview that we had on German television last night, the ARD interview. The pressure is certainly mounting on him. It feels like this is inescapable now, that we do get some sort of early election, that he has to call that confidence vote early. We get maybe general elections at the beginning of next year. This is what he had to say last night. Let's hear what he had to say, particularly on this confidence vote before Christmas.
I have no problem at all with asking for a vote of confidence before Christmas if that is how everyone sees it. And I also think that we should sit back a little and discuss this calmly.
Didn't look massively relaxed as he worked his way through that process. But is this the point that Germany just doesn't have time to hang around, particularly with the arrival of Donald Trump?
It's a fascinating one as well. And look, he's already reaching out to, I believe, Donald Trump, really highlighting that cooperation. All of the European leaders are. You heard that with Ursula von der Leyen offering that maybe an LNG solution could be on the table. I'm sure that's something that would be quite appealing to Germany at a time when Trump is trying to include his gas exports as well. It's music to the U.S.'s ears. Make nice now, but wait for the tariffs. If the tariffs are aggressive, then I think you're going to see a much different response coming through from Europe. It feels like Europe is that's the offer a deal and then possibly respond if you don't get the deal.
Trump's not stupid. Everyone's sucking up to him. You know, they need to translate when it actually comes to the nitty-gritty.
We'll see how it all pans out. Coming up, though, it is the opening trade across Europe. We are seeing futures indicated higher, green across the screen, even in Germany. The DAX higher by 0.8%. We're going to dive into the details right after this break. Stick with us. This is Bloomberg.
Monday morning, good morning. Hope you had a great weekend. We need to think about where we're going to go from here. Friday does, though, provide some clues. Take a look at this chart. This is Europe falling, going sideways. The US market then accelerating to the upside. Little fade into the close, I know. But that's probably, to a certain extent, why we're, Lizzy, this morning seeing European futures higher. There doesn't appear to be a sort of obvious catalyst, and we're going in a different direction to what we saw out of Asia markets.
Yeah, the weakness off the back of the China pessimism in the Asian session not seeming to be transferring into the European session this morning. Futures pointing 0.9% higher for Euro Stoxx 50 futures. The FTSE a little less so because we have the miners here, of course. Iron ore down currently. The DAX even set to be higher. We've had those Conti earnings this morning downgrading their sales outlook ever so slightly. How much of that is already expected? Guy?
I'll pick it up. It's certainly interesting. You mentioned the Continental story. It's going to be a fascinating one on the heels, I should say, of the U.S. election, perhaps ahead of a German one as well. How much of those downgraded sales forecasts actually weigh on the stock? On the bright side, though, maybe seeing some movement in some of the other sectors. Novo Nordisk is, of course, top of mind as well. Joe Easton was there talking about them being on the positive catalyst watch by J.P. Morgan, potentially 10% upside for some of the major heavy hitters of the stock 600. Of course, Burberry and LVMH, we are on takeover watch. And if we do get that takeover news, is it interpreted as a positive by the market? Guy, not every M&A piece actually is, but of course we know that Burberry has been struggling in a big way. They've been trying to reach that mass market. They haven't gotten it. Could Moncler be the answer?
Could be. Certainly appears to be, judging by the market pricing this morning. Market seeing potentially that story as a positive one. OK, here we go. Monday's session is almost upon us. Time for the opening trade. Let's take a look at the numbers that we are seeing populating our screen. The FTSE 100 already up by 0.2%. But as Lizzy says, keep an eye on the miners this morning. That could be an area of interest. Elsewhere, keep an eye on healthcare, as we've been hearing. Novo Nordisk could be a positive catalyst for this market this morning. It's interesting that Conti is not being taken as a negative despite the sales downgrade that we're seeing on the top line. We'll hear from the CFO very, very shortly about that story. The IBEX is up by 0.7%. But the sense here seems to be that there's basically an arbitrage trade. We are pricing in the pickup that we saw late Friday in the United States, our time here in Europe, back into the European market space this morning. And that's why you're basically seeing most markets opening up this morning, including the FTSE 100, 0.6% to the upside. Most of the main markets certainly having a positive performance this morning. Lizzy, kind of break this down for us. What else is going on below the surface?
Yeah, if you look at it by sector, you've got every sector in positive territory this morning. The banks leading the gains. They're higher nearly 1%. Bottom of the basket are basic resources, higher 0.3%. But everything in the green. Look at those miners, as we were discussing, off the back of the China stimulus news. You've got Glencore higher 0.2%, but Anglo flat to the downside. BHP lower nearly 1%. And that is potentially why you've got the FTSE slightly weaker than the rest of the stock 600. But it looks to be a positive start to the week after a pretty dismal one last week, Kriti.
A fairly broad rally. Only 24 stocks in the stock 600 are trading lower. Of course, we're only about 90 seconds into that opening trade, but that tells you something, Guy, about some of that risk sentiment. When we're talking about some of the early movers, a lot of them is what we had telegraphed right before the start of the trade. Burberry, right out of the gates, higher by about 3%. So that's going to be we're going to be keeping an eye on. Another, of course, is Continental, as Lizzy was pointing out. The DAX, of course, not open yet, but when it is, we will bring you those numbers. The Burberry story, the market really taking a stride. Novo Nordisk as well, that JP Morgan stamp of approval certainly helping those shares.
Yeah, in terms of the points, that's certainly where the gains are being made this morning. So it's Novo leading this charge to the upside in terms of the upside on the European markets, on the stock 600. ASML, HSBC, Siemens, Roche, Schneider, Safran, all rising this morning. It's a fairly healthy mix. You're getting a lot of tech companies rising this morning. The banks, as Lizzy was saying a little bit earlier, and some of these health stocks doing all right.
And some of the underperformers, we should mention, are, again, coming back to the energy sector. Glencore, Rio Tinto, and even the drop there, that underperformance there, isn't that much of an underperformance. You're actually not seeing that red in the screen. Again, speaking to that risk sentiment story.
Yeah, we're still waiting for Conti, but I will mention Hanover Ray had its earnings this morning at 6:30. They had this miss on EBIT, but they raised their profit target for 2024, and actually those shares higher 2.1%. Still waiting for Conti.
Moncler's a little softer, but not by much. I guess this isn't a big move to the downside that we're seeing being priced in. This is a story that feels like it's evolving rather than coming as a big shock.
Yeah, we should mention that Continental, we are getting those opening trades. They're higher by a whopping 7.5%, and still climbing. The DAX is also in the green. We're going to have to do some digging on why that is, given that kind of gloomy picture that Continental has laid out.
Is it a gloomy picture? There's so much bad news priced in.
Yeah.
Like, how much more gloomy can you get? Yes, they're downgrading their sales guidance a little bit, but it's not a... The initial language that I saw was slight. So maybe there were some fears that actually the downgrade could have been significantly greater. So actually maybe this is, relative to expectations, quite a small move. There's still this idea that maybe the spin is on track, that you could see maybe the auto unit being... We don't know yet how it's actually going to be spun out, whether it is going to be spin out, whether or not the shares are just going to be given to shareholders. We don't know yet. But a more positive picture in Europe this morning, you could maybe argue.
Yeah, let's bring in an expert on that positive picture. Eleanor Lee, fund manager at Polar Capital, joins us around the table. She, of course, manages the Melchior European Opportunities Fund. We thank you so much. Let's start with that positivity we're seeing in the market today. One of the big conversations we've been having in the last hour has been how much of this is really perhaps a reaction to a very negative landscape, in that so much has been priced in. Where do you stand on that?
I think there has been a wholesale negative view on Europe. And we had some negative earnings revisions post-earnings season. But we're getting to a point now where that can be a contrarian indicator. I mean, you're seeing that. You just mentioned Conti up today on potential downgrade. When you have such negative earnings revisions, that can be a contrarian indicator, especially when we're seeing some of the data out of Europe is not that bad. The economic surprise index is turning up in Europe. And so that often could be a prelude to maybe we're at the end of earnings downgrades, and this could be a better setup for the European market going forward.
But when you look at the fundamental narratives here, we are still talking about a fairly doomy picture, in that Germany is of course, the weak man of Europe, the sick man of Europe, we'll call it. France isn't quite able to kind of perform and show up the way it has. Even the periphery that was outperforming is starting to slow those initial gains as well. I'm curious, a lot of that is baked into the currency picture. Is the weakness in the currency helping the stock market? Could it, if we hit parity?
I mean, it will help in terms of exporters, but I think really it's just all of the negatives are so well known. You know, we had this with China in September, right? It was very weak valuations, overwhelmingly bearish narrative, and then the stock rallied on a bit of stimulus. So perhaps we get to the point when in Europe all of the bearishness is just so well known now, and you have valuations at record discounts to the US. I think there's been too much of this overwhelmingly, particularly post-Trump, that it's buy US, sell everything else wholesale, and that's far too simplistic a picture. There are companies within Europe that will benefit from a stronger US. To your point about currency, that will help certain exporters and those US earners. So this wholesale negative view on Europe is really an opportunity.
OK, so then how does the valuation gap between the US and Europe change? How quickly does it shrink, if that's what you think it's going to happen?
So it's a 40% discount to the US. This is a record discount. Even if you look at it sector by sector, it's a record historical discount. That's where you're seeing some European companies look for secondary listings in the US or primary listings in the US because they recognise that discount isn't rewarding the valuation of their business. So that trend is continuing. So that will be something which could help close that discount as people realise there's this discrepancy. And also M&A, right? The stronger dollar could make Europe a more attractive place for M&A, and that will help as a catalyst to unwind that discount. And then on top of that, we will have central bank rate cuts in Europe. We're just at the beginning of that cycle, and we're going into a period where the central bank rate cuts are will be accelerating versus the US. So that could help the real economy and help change some of that bearish narrative.
Yeah, really interesting, because we were talking about the possibility of jumbo cuts from the ECB in response to Trump tariffs. But I also just want to talk about your sectoral interest in defence and the response there to a Trump win. Do you anticipate him to follow through on what he's talking about, which would be, a quick end to the war in Ukraine?
I was a bit surprised on the Trump win that defence stocks in Europe were not down more, because people thought it increases the chance of some peace deal between Russia and Ukraine. Actually, defence stocks continue to increase on the Trump win, and I think that reflects the medium-term view that really there's a strong necessity for European defence companies to spend, and the onus will be on them in the Trump presidency to spend more. There's that structural growth story that needs to happen there, and also a big replenishment of supplies given the donations to Ukraine. So I think, we're seeing globally the pressure be on for defence spending. You've seen that this morning with Taiwan talking about buying more defence from the US. So I think the defence sector is actually a positive place to be, although if there is a Ukraine peace deal in the short term, there could be some pullback, but the medium-term trends are very, very clear.
If I think about European equity markets and I think about what's happened with Chinese equity markets, huge kind of move upwards on this expectation that we're going to see some stimulus. It's faded a little bit since then, but there is still this kind of expectation at some point that is delivered. Is there a moment like that coming for Europe, where suddenly we come in on a Monday morning and European stocks are going vertical?
I think the European market's quite different. I think the European political backdrop is also very different. There's not a big bazooka in the wings that they can offer.
So what is the catalyst? So it's just a slow grind higher? Is there a moment coming? Do I need clarity on Trump tariffs? There's not a sort of single moment in time where I should think, all right, if I miss it, I've missed that kind of huge moment. I can average into this trade.
Yes, I think it's more of a slow improvement. I mean, there's obviously some silver lining opportunities. I think with the German election, that presents an opportunity for part of core Europe to actually finally look at more of a growth agenda. So I think if that comes on the table, that would be a catalyst for Europe.
Right.
And if there is a China stimulus package that is believed deals with the structural issues within China, that will be positive for Europe. So it's probably more external in terms of what happens in China, and then also more stability in the political backdrop.
So European equities are basically beholden to pretty much everybody else in terms of what happens next. There's no kind of self-generated European story. It's basically a reaction to what is happening in the United States or a reaction to what is happening in China.
Well, European companies are very international, so yes, that is true. But I do think what's happening in Germany is interesting, and that could be an unexpected positive surprise next year if you can get everybody's overwhelmingly bearish on Germany, if you can get more of a positive outlook for that country.
OK. Well, yes.
Silver lining.
Silver lining.
And you could also get the Draghi competitiveness report taken more seriously. Maybe this brings more European cohesion.
Yep.
That would be a positive story.
Well, the first big step on that is Kriti's actually reading it, so that's the whole thing, apparently. Eleanor, nice to see you. Thank you very much indeed. Eleanor Lee, fund manager at Polar Capital. Let's take a look at what is happening on the Core 6 this morning. We've already mentioned what is happening with Novo Nordisk. It is trading higher, but everything seems to be trading higher this morning. As you can see, we're up pretty much across the board, across the whole of the Core 6 this morning, and you've got a pretty solid mix in terms of the sector story. Let's check some of the individual moves that we're working on outside of the Core 6. Joe Easton has all the details there.
So Continental, Guy, is the best performing stock this morning, up almost 8% now for the company. Pretty impressive, given it did actually downgrade a lot of its sales guidance for the tyre maker. The key thing, though, according to analysts, is around the spin-off that you guys were discussing. And in the statement, they do actually say that a lot of the requirements for that spin-off have actually been fulfilled at the moment. So it does look like they're suggesting that will progress. So that is what analysts are pointing to, and does seem to be the main driver. Of course, as we mentioned, that stock down heavily over the past year or so. Then in the luxury space, the Daily Mail's article getting a bit of attention. We can see the Burberry stock. That was actually the best performer on the Stock 600 at the open. Has come down a little bit at the moment. We're still up 1.5%, but Moncler clearly going the other way. So that report on potentially the Italian company taking over Burberry, that progressing. Some of the staff apparently being informed that this is moving forward, and therefore we are seeing the market taking note of that report. Burberry getting a bit of a boost. Obviously another stock that's been slammed recently, of course, but it is gaining this morning. Then in terms of your insurance movers, Hanover Re in reinsurance, that looked pretty strong, and we're getting a 3.4% gain on that one, on their earnings out of Germany. Now, Direct Line actually did look a little bit weak. Some of their premiums in the home and motor parts here in the UK, they're two big businesses, actually declining a bit. But the stock holding up, potentially a lot of that priced in. But Hanover Re really outperforming, up 3.3% at the moment. The other one in financials is going to be NatWest, because we got news that the UK government is offloading another £1 billion worth of the stock as part of the directed share buyback that the bank has agreed to, NatWest has agreed to. We know that the UK is selling the stake, but the timing of it is unclear. So that is the surprise in terms of it being announced today. We didn't expect to get that. So NatWest getting a bit of a boost, £1 billion worth of stock being bought back by the company. Then in terms of your ratings, firstly, we mentioned Ryanair. Now, this is all about fares. O'Leary has been warning around declines in fares for months now, but UBS says this is potentially over in terms of the earnings impact, and they reckon the stock will start to recover following a slump, and we're up 1.1% over in Dublin. And then finally, just to check back in on Novo, I was very excited about that one this morning, up 1.3% at the moment. Remember, they do have the data. It's called CagriSema, I believe it's called, the new drug. It's going to be even better than Wegovy for anyone looking to do that, and it is boosting the stock this morning, up 1.3%. The results will come out in December. Could be a driver, could drive a 10% gain, according to JP Morgan, and the stock is rising in Copenhagen today.
All right, Joe Easton from our equities team with the movers at the open. We thank you. In short, green across the screen. The stock 600, 0.9%. Green for the FTSE 100, higher 0.7%. The CAC Cajon higher nearly 1%. And the DAX in Frankfurt, 1.1% this morning. If you break it down by sector, just one in the red. That's basic resources because of the China weakness weighing on iron ore. We've also got Brent had been weaker, but actually now stronger, 0.2%. So a very positive start to this week. But next up on the programme, we are going to be speaking to EDP, the CEO, Miguel Stilwell de Andrade. EDP really under pressure last week because of their renewable division's results and then the Trump win. How is he thinking about the future of ESG? A really interesting conversation given the backdrop of COP happening in Azerbaijan at the moment. So do stay with us for that conversation next. This is Bloomberg.
History tells a story here. Both parties have for consecutive 30 years prioritized energy capacity build out in the US. We see that continuing. Let's not forget that IRA has created build out in both factories and projects which for many reasons are related to nearly 3/4 of the states of the red color.
Henrik Andersen, the Vestas CEO, speaking to us a few days ago. He was speaking before the US election, expressing optimism about the renewable energy build-out story in the United States. But Donald Trump's resounding win in that election has seen clean energy stocks fall sharply across Europe. Let's get another viewpoint on what is happening here and where this sector goes next. Miguel Stilwell de Andrade, CEO of Lisbon-based energy giant EDP Group, joining us now. Miguel, thanks for your time this morning. Really appreciate it. What does a Trump presidency mean for EDP?
Morning. I think, first of all, just to congratulate President Trump on a very decisive victory last week. I think that was very clear, and I think it helps clarify the next 4 years. We have been investing in the U.S. for the last 20 years. We're one of the top 5 renewable players in the U.S., and we actually had a very successful growth throughout the various different administrations, including the Trump administration, the first one. So what we're seeing in the US is a tremendous growth in demand for power, driven very much by AI and by sort of all the digital infrastructure, data centers and so forth. And so we're seeing a tremendous demand also for renewables. And that was true over the last couple of years, including back in the Trump administration. We're seeing it accelerating now. And we think that going forward, it will still be necessary to deliver renewable projects to support this growth in demand. So we're actually quite optimistic about the next couple of years.
Is it going to be better than the last few years? Miguel, the stock has really struggled over the last few years. Your renewables business stock has struggled over the last few years. What is the catalyst to get this stock moving, to get your business moving? What is the market missing in terms of the message that you're delivering? Why shouldn't we be pricing the stock a little bit higher? Is it because we see headwinds in the United States? Is that going to make it harder from here? Is it what is happening in Europe and its inability to maybe drive this project through in the way that we first anticipated? What is it that gets your stock moving again?
Well, a couple of things. First, I think there's now a period of great uncertainty, obviously, there's been a lot of speculation about whether the Inflation Reduction Act would be repealed or not. Our personal view is that the Inflation Reduction Act, there may be some changes, taking a scalpel to it. There's been talk about that, but that the fundamentals in terms of the tax credits for renewables or the investment tax credits, they will be there the next couple of years. It's been a bipartisan issue that's been agreed on over many, many years, and we would expect that to continue going forward. The other thing is actually delivering. EDP is actually delivering 4 gigawatts, so a record number of installations this year. So it's very much also about execution. And so I think once this uncertainty disappears, once we get more visibility on exactly what are the specific policies, what are any specific changes that will be made to Inflation Reduction Act and to the support that's being given to the renewable build-out, hopefully then that will allow people to come back into the stock and we'll take it from there. I think the focus for us is certainly very much about executing, about delivering those projects.
Yeah.
As I say, we are seeing a lot of demand for them, and so hopefully that will come through over time.
Miguel, President-elect Trump has been very vocal on the campaign trail of, yes, renewables, but the specific mix of renewables. He's favored solar over wind. He's had the backings of some major players in the renewable space for that trade-off. I'm curious, in terms of your investment plans, your growth plans, does that create an incentive to invest more in solar over wind?
So actually, we were primarily a wind company back until sort of around 2020. We have actually been investing mostly in solar now. So the vast part of our portfolio investments are actually in solar, and they have been. Most of the 4 gigawatts I mentioned are precisely in solar in the US. And so we do see solar as being a very big part of that growth going forward. We also believe very much in wind. Wind is a premium product. It has a more, the way that the wind blows is not just at a particular point in time. And so let's say that energy is more valuable than solar. So we think that both technologies actually are very important together with batteries. And we see that happening in the US. We see that happening, to be honest, in many countries around the world. So we see that investment continuing independently of the political cycles.
Miguel, talk to us a little bit more about that investment and where it's actually coming from. One of the juiciest parts of the private markets, for example, is in these infrastructure deals and in the renewable deals on the assumption that a lot of European governments, maybe the United States, will actually help fund that. Are you seeing that? Are you seeing that demand, that investment come from the private players?
Yes, exactly. We're seeing a huge amount of demand coming, for example, from the big tech, whether it's the Amazons, the Googles, the Microsofts. All of those, as they are having more demand for data centers and for the AI, they are then procuring that power in the market, and they're looking to us to provide that power. So we've actually seen a huge pickup over the last couple of months, and we expect that also going forward in terms of get me green, renewable power. I think one of the things you have to keep in mind is that renewables continues to be the most competitive source of energy out there, or of power out there. But on top of it, it's clean, doesn't pollute. And then on top of it, it also provides energy independence. I mean, I think Fatih Birol of the IEA said it recently, you can't hold hostage wind and solar. So if you have that resource, if the US has good wind resource and a good solar resource, why not use it? I mean, that is extremely valuable. That's true in the US, it's true in Europe. Europe also imports a lot of its energy, of its gas and oil from other places. Why not use your endogenous resources to actually produce clean, cheap power?
Yeah, but Miguel, just going back to Guy mentioning the beating that your renewables division took last week, would it make sense to make another attempt to buy out that unit?
Well, first, just to maybe carry on also from my previous comments, I think there are two things that you also have to take into consideration. One thing is this is a very capital-intensive industry. And so when interest rates went up, our stock took a beating. I think that was across the board. If we expect now interest rates to come down, at least certainly in Europe, that's true. I think that will also significantly reduce the pressure on some of these stocks. But going to your question, we've been very comfortable with the current structure of EDP and EDP Renewables. EDP Renewables was listed back in 2008, has gone through various different cycles. We see it as a way of giving a lot of transparency. Sometimes, it's out of favor. Other times it's been very much in favor. I mean, we had a huge euphoria around the stock back in 2020, 2021. But it does give a lot of transparency and visibility to that stock. So we're comfortable with the current structure.
And just going back to wind, would you sell your stake in Ocean Winds, perhaps?
Listen, that's a joint venture, as you know, with Engie, specifically for offshore. What we have been doing over the years is selling down stakes in some of the project companies, whether it's in Scotland or in France or even in the US. These are very large-scale projects, and so we try to de-risk them and bring on additional partners, and I'm sure that's something we'll continue to do going forward as well.
All right, Miguel Stilwell de Andrade, CEO of EDP, we thank you so much for joining the program. Guy, Lizzy, he made a really crucial point there, is that there's so much investment. Why not pursue more? And I think my answer to that is because it's expensive. It's expensive for consumers. It's expensive for a lot of companies. That's why these deals have such a premium.
And it doesn't always deliver. So Europe at the moment, very little wind and not a lot of sunshine. That is not a great combination for renewables. So electricity prices have been going up on the back of that. So you do need alternatives as well. That's the other factor that we need to think about here. And that takes you back to your gas comments around what happens with the United States too. Kind of what does the energy mix look like in a second Trump presidency? I think is going to be a really difficult conundrum for Europe to solve.
So much of the conversation has been baked into that Trump equals a pullback of the IRA, and it may not be as straightforward as that. We're going to dive into that in the months ahead, of course. Coming up, we're going to dive into Burberry shares, though they're trading higher this morning on those rumors about a Moncler bid. Stick with us. This is Bloomberg.
Monday, the 11th of November. It is Armistice Day, Veterans Day, and the British Prime Minister has journeyed across the English Channel. He is currently at the Elysee Palace. You're looking at a live shot coming to us from Paris. We are anticipating that the President and the Prime Minister will appear shortly. We will bring you those pictures. Interesting, I think, just to kind of take note of what is happening here in terms of potentially in an era of a Trump presidency, the British may be working a little bit more closely across the Channel with their European counterparts in terms of fashioning some sort of new, different track for the European security architecture and agenda. Anyway, we will continue to track what is happening in Paris in a little bit more detail. What is happening with the markets, Lizzy?
Well, I was going to say the last time I was at the Elysée, it was to witness the bromance between Rishi Sunak and Emmanuel Macron. So I'm sure Keir Starmer is going to try and create a bit of a warm relationship, given Trump is going to be in the White House. But as you say, checking in on these markets, it's green across the screen. The stock 600 higher 1.1% this morning. The FTSE is up 0.8%. You've got Burberry shares higher 3.5%, so offsetting some of the weakness in the miners because of the China stimulus disappointment. Iron ore down, basic resources the only sector in negative territory. But we can dig into the Burberry speculation now. Those shares, as I say, higher on reports that Moncler is poised to take over the British fashion house. The speculation coming from the Mail on Sunday, it says that staff at one of Burberry's flagship stores in London have already been told about a takeover. So let's get more now with Andrea Felsted. She covers luxury and retail for Bloomberg Opinion. I've been waiting to ask you this, Andrea. I mean, if this is true, do you think that this is the end of London fashion? We've already seen the likes of, Victoria Beckham, Vivienne Westwood going elsewhere to fashion capitals around the world.
I think whatever happens, Burberry will not be the luxury brand that it used to be. I mean, whatever happens, it's going to move from aspirations to really compete with the likes of Louis Vuitton to being much more like Coach or Ralph Lauren.
Ooh. Lizzie's not a fan of that particular outcome by the sounds of things. Is this a done deal? This feels like it's a done deal, but you sat down here this morning, you went, there's no RNS. Why is there no RNS? There should be a regulatory statement if this is as close as it feels like it is.
I don't think this is as close as it feels like. I chased this last week and it certainly didn't feel like a deal was about to be done. The shares are up. The Mail on Sunday story was quite specific. If they are about to do a deal, then the takeover panel will force them to make a statement.
What's the hesitation here? Is there another suitor involved? I mean, what gets in the way for Burberry?
Well, there's a lot of things in the way. The market capitalisation before this morning's rise was about £3 billion. Given how much it's fallen, you've got to probably offer a 50% premium. Moncler isn't that much bigger. Probably can't do it in cash. Got to do it in shares. Some UK fund managers with a UK mandate can't hold overseas shares. You've got to then compensate them further for that fact. Moncler has also got quite a lot going on because it took over Stone Island a few years ago. That's not firing on all cylinders. We know Burberry needs work. There's quite a lot here that needs to be done. Now, the interesting factor is that Bernard Arnault, LVMH, invested in Moncler a little while ago. There's a lot in it for him. You get Moncler to do the heavy lifting. He gets the value of his indirect stake goes up. If it doesn't work, he can just come in and buy Moncler.
So that's the LVMH story. Other players from other parts of the world.
Now, the interesting one is Tapestry, because Tapestry has agreed to merge with Capri, or agreed to take over Capri. That has been effectively blocked. So they have appealed it, but nobody really expects that deal to come through. Now, Tapestry said last week they wouldn't seek immediate M&A, but the expectation is that doesn't go through, they buy Burberry.
Speaking of cross-channel friendship.
Absolutely, we have one potentially unfolding. I'm not entirely sure who has manufactured Keir Starmer's coat or where it came from. But we do see the French president welcoming the British Prime Minister as we note and mark Armistice Day here in Europe this morning. There is a subtext here. There is a wider discussion that is happening around what's Europe and the UK do next in terms of the security architecture that could come in a Trump era. So we'll keep a firm eye on what is coming out of Paris as we work our way through this morning. Let's talk Bitcoin.
Let's talk Bitcoin. Speaking of that Trump era, rallying past $81,000 for the first time, a lot of that having to do with Donald Trump's embrace of digital assets and the prospect of a pro-crypto Congress. Bloomberg's Valerie Teitel, I'm sure, has been reading into this quite a bit. Walk us through it.
Look, Trump made a lot of promises in his campaign about being crypto-friendly, one of which is that he wants all future Bitcoin to be made in the USA. He wants the USA to be the crypto capital of the world. He also commented on a national stockpile well of cryptocurrency and said that he wants to create a Bitcoin Presidential Advisory Council. He also has said many, many times in remarks that he wants to unseat the SEC chair, Gary Gensler.
Well, it was funny to listen to Jerome Powell in the press conference being quite curt about questions about his future given Trump's win. Do you think Trump actually has the power to dismiss an SEC chair?
Well, it's a big question, Lizzy. He doesn't have directly the power to dismiss the SEC chair, but he can get rid of them on cause. It's just a matter of whether they have that. So a bit of gray area around that. But it's just another signal about how serious he is about a pro-crypto agenda. Gary Gensler has brought more than 100 legislation actions against crypto during his tenure. He says that crypto is rife with fraud and misconduct, and he believes that crypto essentially is under his jurisdiction. So they might have a fundamental disagreement on whether crypto as an asset class should be regulated by the SEC. Trump has promised supportive regulation, and the sweep of the House and Senate really does pose the fact that there will be a more friendly crypto legislation coming through, even if Gary Gensler is still there.
Just in terms of, do we know who's buying? Is this fast money that's coming in? I.e., could it come out as fast as it's gone in again?
Look, it's a good question, but there has been a big surge in ETF inflows. I know that Bitcoin ETFs haven't been trading for that long, but the day after the election, when it was more certain that Trump was going to take this next presidency, we saw the biggest inflow ever into Bitcoin and crypto ETFs broadly. On a wider view, it's been up 90% in the last 12 months, and since the lows of 2022 of the FTX collapse, Bitcoin is itself up nearly 400%. So a bit of a big about turn when it comes to the cryptocurrency landscape.
It's interesting, actually. I just want to take it. Andrea's still here, so I'm just going to ask her this question. Bitcoin was a big driver of luxury.
It was indeed, particularly in the US. Now, with China being in the doldrums, all the luxury brands are now looking to the US. And so the rise in Bitcoin could play into that strategy.
Be interesting. Maybe we're looking at a revival of the luxury trade off the back of the Bitcoin trade. Watches have been really hit recently, and I just wonder whether that would be... It was interesting, Richemont numbers were soft.
Yeah.
That was a China trade, but I do wonder whether or not, to Andrea's point, whether or not you get a pickup back in Bitcoin, whether or not there's a desire maybe to get back into the watch market as well.
Well, I think the part that stuck out to me on Valerie, she said that he wants everything to be made in the USA. Did we not just have this conversation with the EDP CEO as well, talking about just the cost of energy? Things for energy, for Bitcoin to be mined in the USA, it requires cheap energy prices. I don't know if that's the direction.
Can you do AI? Can you do AI server farms and Bitcoin mining in the United States? Like, how much energy would that require?
So even the AI server farms require the electricity grid. I'm a Texan for our international audience. This is why the Texan grid is different than the rest of the country. It's a very wonky system, but it's for this reason that when there are outages, off mining as one use case, that's where you run into this. You get even nerdier and say that utilities are actually powered by not oil, but by natural gas as well as a function. When oil prices get high, they switch to natural gas. We can nerd about
maybe a reason not to export as much gas.
Exactly.
Out of the United States to control that price.
So luxury, Bitcoin, natural gas, AI, we've covered it all.
Okay. We're going to talk politics next. We'll fold that into the mix as well. Maybe with a little bit of the auto sector folded in as well. We're going to be speaking to the Continental CFO. He is coming up. The company has posted third-quarter earnings that beat on robust early demand for winter tyres in Europe. So people are buying their winter tyres. The overall picture seems to be not as bad as anticipated, despite a top-line downgrade. That seems to be the sense. We'll get an update in just a moment. That's next. This is Bloomberg. Welcome back. You're watching the opening trade. We're 42 minutes into the session. As you can see, there's plenty of green on the screen. We are up pretty much across the board. London is underperforming. The only sector in negative territory this morning is the basic resources sector. It is down. It is followed closely, though, by the auto parts sector, which is only up by 0.5%, the second worst performing sector in Europe this morning. Construction is the leading sector. Let's talk about politics and how that's folding into the debate that we're having this morning around the table. Political turmoil very much continuing in Germany. We have seen the collapse of the ruling coalition. There were 3 traffic lights. There's only 2 traffic lights now. We're wondering when they're going to go out. Let's get an update on when we are going to get a general election in Germany. Ollie Crook joins us out of Berlin. Ollie, the latest.
Yeah, so listen, Guy, I mean, it's been a really sort of tumultuous couple of days here in Germany, and really what everyone is focused on right now is the mechanics of getting this federal election finally called. That's coming, as we'll remind people, more than a year early after the collapse of the Scholz government, after, as you mentioned, a third of the coalition is now no longer part of the coalition. So what Scholz needs to do is to call a sort of referendum on himself, a no-confidence vote, which he will presumably lose in order to get the election going. He wanted to have that election in March. Everyone said, no, actually, that's not going to be good enough. It needs to be sooner. So we're expecting that to happen, potentially the full federal election in January or February. But as you can see on the screen right there, the issue is perhaps not necessarily the mechanics. It is how a government will come together even after this vote. As you can see there, the two leading parties in Germany right now, the CDU, the conservatives led by Friedrich Merz, Merkel's traditional party in the #1 slot there, and then the AfD is #2. And even if these two parties would work together, which, by the way, they absolutely wouldn't, because no party in Germany has said that they will work with the AfD, that doesn't take you over the 50% line. So really a very sort of thorny political discussion ahead at a time when what Germany needs is coherent and cogent government.
Ollie, you've been covering, of course, the auto sector very, very closely, being based in Berlin. Connect the dots for us here. What does the political ramification or an early election mean for the auto sector?
Well, really, why this sort of government fell apart is fundamentally is because of the economic situation of Germany and the real disagreements within this three-party coalition about how to bring the German economy back, right? The SPD and the Greens have basically talked very openly for a while now about suspending the debt brake. And this is that constitutional debt brake that is in the German constitution. In order to change it legally, you need 2/3 of the parliament. And it basically says you cannot borrow in excess of 0.3% of GDP for debt. That is at the heart of the question here for the government and why it collapsed, because the finance minister refused to move on that. What I think is interesting is in his departing sort of speech at the government collapse, Olaf Scholz says he has really 4 priorities. And the first two, one is to bring energy prices down for business, and 2, to do supportive measures for the auto sector, which, as we've been talking about for the last few months and really for the last year, is really at the center of the pain here for the German economy. Where things get even worse potentially for Germany and more complicated is the election in the United States. The United States is now Germany's biggest trading partner. U.S. overtook China this year to be the biggest trading partner with Germany. If you get 10% tariffs, that means potentially exports to the U.S. from Germany could fall 15%. For the auto sector, it's closer to 30%. So this is very consequential. And obviously, everybody in the auto sector within Germany will be watching very closely for this next government and what policies they can bring forward to try to boost demand and support the companies themselves.
Well, exactly. Merz saying that he's potentially open to a deal with Donald Trump. What could that look like? Could it involve the auto sector?
Yeah, so what's interesting here, Lizzy, is I talked to a lot of world leaders in Europe over the last couple of days in Budapest, and guess what? Everybody's open to doing deals with Donald Trump. The question is not that. The question is Donald Trump open to doing deals with these leaders? If you believe his rhetoric on the campaign trail, he says that the EU has taken more advantage of the United States than even some of the enemies of the U.S., and he's pointing to that sort of trade imbalance. So listen, I think that everyone is very cautiously optimistic here in Europe. We'll have to see.
All right, thank you. Bloomberg's Oliver Crook in Berlin. And we can stay in Germany, actually take the temperature of German manufacturing now with one of its key players. We can speak to another Olaf, and that is Olaf Schick, who is the CFO of Continental. They've reported their earnings this morning, and he joins us now from Hanover. Good morning, Olaf. I see your shares up 6.1% currently, despite you lowering your sales outlook this morning. And it seems to be because your results show that the requirements for the spin-off of your autos unit do appear to be fulfilled already. You've penciled a date of the end of 2025 for this spin-off to happen. I'm wondering now, could you bring forward that date?
Thank you. Good morning, and thank you for having me. Yes, we are actually very happy about our earnings in Q3 2024. We showed improved earnings year on year, but also in comparison to the first 2 quarters. Yeah? And that is driven by automotive results, tires results in particular. We see the success of our restructuring measures, of our cost reduction, of our R&D efficiency. We do see also that our tires business in Europe and Asia Pacific is performing well. We see a good start of our winter tires sales season. We are also increasing capacity in Asia Pacific and are ramping up our tires production capacity. Now, having said that, and with regard to your question on the spin-off, we're still in the detail analysis. We're making good progress. We plan to conclude the detailed analysis within Q4. We're working very hard around the clock on that. We're preparing in parallel the spin-off already. For us, it is important in the new structure, right, to have a capital market-ready listed automotive unit, but also tires and Conti Tech will be able to create more value in the new setup. So we are making good progress, and we are targeting the second half of 2025. Everything else, we need to wait until we conclude our detailed analysis. But most important for the spin-off and for everything we are doing is solid operational performance, and that we are on the right track, we can see in our disclosure of the Q3 results, which we made today.
OK, so second half of 2025, not necessarily the end. I wonder, have you already talked to investors about the spin-off? And if so, what are they asking you? What do they want to know?
I think most important for investors is whether we are reliable, what is the capital structure. And here I can say, and we are saying, we will provide automotive with a very solid balance sheet on the one side. On the other side, Continental, after the spin, will be at least investment grade. And then, of course, again, important for investors and for us is to make progress step by step and to work hard on operational performance.
Olaf, it's Kriti in London. Walk us through a little bit of that operational performance here, especially given some of the earnings that are coming out, that weakness in your auto unit, although perhaps not necessarily what the stock market is responding to this morning. I'm curious how much of that weakness actually means that you have to change maybe your pricing strategy. How are you thinking about that?
Well, if you look at the performance of our automotive business, we can see three factors. First, we're making progress in our pricing negotiations with our customers. We concluded already 90% of our pricing in the third quarter, and the remaining gap we will conclude within the fourth quarter. Second, and that is maybe most important, we are making progress on reducing our cost basis. If you look, we made progress on reduction, in particular on the administrative side and on the RD side, but we reduced headcount by the end of the third quarter by 4,500. That is 3,000 on the administrative side and roughly 1,500 on the RD side. That means we have already achieved savings of 100 million euro by the end of Q3, and we are targeting 200 million euro savings on the administrative side by the year end. And starting 2025, we will lower the cost base by 400 million euro. I think that is important because we need to tackle the cost side while we see still very weak markets and very weak automobile production, particularly Q3. However, some progress we are seeing in the fourth quarter where production is picking up.
Olaf, that's very much catering to, of course, a European consumer. I'm curious about the read-through from the Asia weakness as well. Is your strategy then changing then? You talk a little bit about that operational performance. Talk to us about your strategy when it comes to Asia in particular.
Well, for Asia, if you look, here I would like to talk about our tires sector. Our tires sector posted a good result in the third quarter, and we are on track to fulfill our full year targets. And this is driven on the one hand by good European business, on the other hand by the business in Asia Pacific. I think we are doing well in comparison to our competitors in Asia Pacific. We are ramping up tires production capacity in Asia, in Thailand. We are investing 300 million euro in that facility. And we are providing in APAC the top 5 electric vehicle producers with our tires. So that is another proof point that we are implementing the right strategy.
Olaf, good morning. It's Guy. Do you think the Chancellor should wait, or do you think he should call an early election? What is the point in waiting? What would your advice be to Olaf Scholz right now?
There are many challenges currently in Germany regarding the economic situation. We have huge challenges on the labor cost side, on the energy cost side. Bureaucracy costs are too high, and our corporate income taxes are not competitive, right? So there are a lot of challenges. What we need now is, as soon as possible, so the faster, the better, a stable political situation with defining a clear target picture for the economy that is missing. So if we need soon a new government, the proposals by the industry are on the table. We are supporting them. But on the other hand, we as a company also need to take our right decisions, implement the right strategy, do a portfolio review, do cost reduction and work on implementation. Yep. So we are supporting. But yes, we need soon stable political conditions for Germany.
OK. You mentioned corporate taxation there. Would your advice be to Friedrich Merz that he should lower taxes to around 25%, corporate taxes? That certainly seems to be on the table at the moment. I'm assuming that you would welcome that. Would that be a good thing for Germany? Would that be a good thing for Continental? How big an impact could it have?
Absolutely. We need competitive corporate income taxes. We need competitive energy prices. We need investment into infrastructure. We need positive momentum here in Germany. So we are looking forward. We see this crisis as a chance, as an opportunity for Germany. And the industry, again, has made concrete proposals that are on the table. And lowering income tax for corporates, for sure, is one of them.
Olaf, great to catch up. Thank you very much indeed. The stock higher this morning. Olaf Schick, the Continental CFO, joining us from Hanover. A pretty clear message. Get on with it. And the new government's lower taxes.
And he hasn't even talked necessarily about the effects of, say, the EV tariffs as well. We're getting a headline crossing the terminal as well that the EU actually is trying to have those conversations with Beijing, but to very, very little success.
It's going to be really interesting to see how Beijing responds. Is it going to penalise Italy at the expense of Germany? Does Germany get a better deal out of China? Is China trying to divide and rule maybe on the EV story here in Europe?
As we await those answers, we've got a big week coming up. We've got US CPI coming on Wednesday. We've got the Mansion House address on Thursday from the Chancellor, Rachel Reeves. We'll hear from Andrew Bailey, the Bank of England governor, amid lots of data out of the UK. Jobs tomorrow, GDP on Friday. And, of course, we'll hear from Fed Chair Jay Powell as well on Thursday, amid lots of other Fed speak now that we're out of the blackout period. So plenty to monitor this week.
Markets, in the meantime, on an absolute tear. You are seeing Eurostoxx 50 higher by about 1% and counting. The DAX higher by 1.2%. A lot of doom and gloom when we started this show. If you looked at the markets, you never would have guessed. Of course, we'll have that and more coverage. You have to stick with us for an interview with IBM Vice Chairman Gary Cohn. He'll be joining at about 1 p.m. UK time. It's an interview you do not want to miss. When it comes to the technology story, I'm sure a little bit of politics and geopolitics will make its way in there. Stick with us. That does it for the opening trade. The Pulse is up next. This is Bloomberg.